Okay, so let's jump right into it. As we're wrapping up 2025, there's this huge kind of weird disconnect at the very heart of Tesla. On one hand, you have its main business, selling electric cars. But on the other hand, you have this absolutely astronomical valuation. So in this explainer, we're going to break down exactly why the market is treating Tesla less like a car company and way more like the next giant in AI and robotics.
First off, let's just get our heads around the sheer scale we're talking about. Tesla's market cap has soared to a staggering, record-breaking $1.6 trillion. I mean, that number represents an absolutely enormous amount of investor confidence. It's a bet on the future of, well, almost unprecedented size. And right there, that brings us to the central puzzle. If everyone's so confident, if the valuation is through the roof, why is the company's main product, its cars, in a pretty serious sales slump? This is the question that just doesn't seem to add up on the surface, and it's exactly what we're going to unpack. And look, this isn't just some small dip we're talking about. We're seeing major downturns in all of Tesla's most important markets. Sales are down 9% in the US and in China, and in the European Union, it's a massive 39% drop year over year. So the problem is real, it's global, and frankly, it makes that $1.6 trillion valuation even more baffling. So to start solving this puzzle, we have to look past the car sales numbers. The very first big clue is the company's massive all-in bet on a driverless future, the Robotaxi network. So what even is a Robotaxi? Well, just imagine ordering an Uber or a Lyft, but when it pulls up, there's nobody in the driver's seat. That's the vision, right? A huge worldwide fleet of autonomous cars that you can just summon with your phone. It's not just a new car, it's a total reimagining of how we get around. And this is where you really see that classic gap between the promise and, well, the reality. The plan for the end of 2025 was super ambitious. Be in 8 or more cities, have a huge fleet of these cars, and get rid of the human safety monitors. The reality today? They're in just 2 areas. The fleet is tiny, about 160 vehicles, and they've still got employees inside supervising things. This isn't exactly a news story. As CFRA analyst Garrett Nelson points out, setting these incredibly ambitious timelines and then missing them is kind of part of the Elon Musk playbook. Investors have seen this movie before with other Tesla products. So why isn't Wall Street freaking out? This is the crucial part. The big money investors seem to have already priced in these kinds of delays. For them, it's not about hitting every single deadline perfectly. What matters is that the Robotaxi network actually exists, that there's real, tangible progress you can see. They're playing the long game. Okay, now you can't have a Robotaxi without the robot part, and that dream is completely powered by one core piece of tech, full self-driving, or FSD. And this is where the story gets really interesting on a global scale. Get this, right now the adoption rate for FSD is actually pretty low. As of late 2025, only about 12% of Tesla customers are actually paying for the service. But here's the thing, investors don't see that as a failure. They see it as a massive, untapped gold mine. If Tesla can nail the technology and get it approved everywhere, that other 88% represents a gigantic potential revenue stream. And the key to unlocking all that potential is going global. Just look at the plan for 2026. They're aiming for the UAE as their first entry into the Middle East. They're expecting to get full approval in the enormous Chinese market by March, and crucially, the approval process is finally kicking off in Europe. Any one of these could be a huge catalyst for the stock. Now, that process in Europe is a really big deal because it's a notoriously tough market to get new tech approved. It all starts with testing in the Netherlands. If the Dutch regulators give it the thumbs up, that decision can then be recognized by other countries in the EU. It's a tricky path for sure, but it's a clear one, and it could completely revitalize that struggling European market for Tesla. Okay, so we've got robotaxis powered by FSD. But here's the crucial leap that investors are making. The very same AI that's learning to drive on city streets is also the brain for Tesla's other huge gamble. To really truly understand that $1.6 trillion number, we have to look beyond cars completely to the ultimate long-term vision, robotics. So, say hello to Optimus. This is Tesla's humanoid robot. The idea is to first use it for repetitive, maybe even dangerous jobs in factories, but the eventual goal is for it to be a helper in our homes. And this is not some little side project. It's seen as a core part of the company's entire future. Now, the timeline for Optimus is
well, it's incredibly ambitious. Right now, they're still dealing with basic design and supply chain headaches. But the plan is to show off a production prototype as early as March 2026. The real acceleration in the tech isn't expected until the mid-2030s. But the potential prize at the end of that road? A market that could be worth $5 trillion by 2050.
And if you want to understand just how important this is to that crazy valuation, just listen to this. Musk himself has said that he believes Optimus could one day make up 80% of Tesla's total value. Just let that sink in. The car business, the energy business, all of it could end up being just a small fraction of the robot business.
So what's the engine behind all of this? The robots, the robotaxis, the massive data centers you need to train the AI? It all comes down to this, the AI5 chip. This is Tesla's brand new in-house piece of hardware designed to run its entire AI ecosystem. They claim it will blow rivals out of the water on performance. And with production slated to start in late 2026, it is the literal backbone for this entire vision. Okay, let's pull all these threads together, because what we're really looking at isn't one company anymore. It's more like two companies living under the same roof. You've got the Tesla of today, and then you have the Tesla of tomorrow.
And this table really lays it all out. The current reality is an EV business with slowing sales, a tiny little Robotaxi pilot program, and robot prototypes that have supply chain problems. But the future promise column? That shows a world with a dominant global transport network and a robotics business that could be worth trillions. Investors today are looking squarely at that column on the right.
So that's the bottom line. The market's valuation of Tesla has pretty much detached itself from car sales. It's no longer about how many Model Ys they sold last quarter. It is a massive, forward-looking bet that Tesla is going to deliver on its promise to become a dominant force in artificial intelligence and robotics.
And some analysts think this is just getting started. Wedbush's Dan Ives is predicting that if Tesla keeps making progress on this AI roadmap, its valuation could nearly double again to $3 trillion. The stakes here are just incredibly high.
Which really leaves us with the one ultimate question. For investors and for you, what do you see when you look at Tesla? Do you see a car company that's in trouble, facing slowing growth and tough competition? Or do you see the foundation of an AI and robotics giant that's on the verge of changing the world? The answer to that question is exactly why Tesla is still one of the most fascinating and most divisive companies on the entire planet.